This tutorial is just to describe the two sections not covered in the first three examples, and they are the project assessment and affordability sections of the data entry sheet. Both of these sections are optional and need only be completed if the user wants the program to measure the results of the project against predetermined targets, or to calculate whether the user has sufficient funds available in equity and cash flow to complete the project. Either or both sections can be completed independently, although the project assessment will not be complete if the affordability data is not included. When the program starts and displays the home screen, I will click on the button to go to the full data entry sheet, and at the top of the screen I will click on the link to the financial information, and then scroll down to the optional financial information section. The first two items relate to principal and interest loans. These can be left at the defaults because they have no bearing on the outcome unless this is the type of loan you are using for the project. The information is only used on the equity growth sheet and only relates to loans on properties that are held for growth or cash flow. The third item is used on the equity growth sheet to determine our after-tax income. The rate of taxation specified here should be the rate paid by the person or entity that will receive the income from the property. The next four items are where we specify the targets we would like to achieve from the project. These are arbitrary settings so the program can assess the end result expected from the project against the desired outcome. When this section is completed, the results can be seen at the bottom of the project summary sheet. All assessments are based on the details provided in the data entry sheet, and calculations that are made are based on this data. The utmost care should be undertaken in the preparation of this data to ensure the highest level of accuracy in the assessments. These assessments must not be used as a substitute for your own due diligence, and you should always seek the advice of a qualified financial advisor. No assessment is made about the suitability of the proposed project in respect of the investor's portfolio. The last section on the data entry sheet is the affordability information and is optional. If this section is not completed, then the borrowing sheet will not be visible. If the information is provided, then the borrowings sheet will summarize the data and calculate the amount of additional borrowings the investor can get for the project. The first part of this section is where we need to specify the amount of cash we have available and the extent of our existing lines of credit, redraw facilities and other loans available for the project. We can also specify the amount of funding available from a joint venture partner, either as a percentage if the partner is providing a percentage of the overall cost of the project, or as a lump sum amount. Their interest rate can also be entered so that the interest costs for the project are more accurately calculated. The next part is a summary of the user's existing portfolios so that the program can calculate the amount of equity that can be drawn down if required. If there are insufficient lines available, then the amounts can be totaled and inserted on a single line. These values could also be copied into the spreadsheet automatically with a formula that collects the data from another spreadsheet. The portfolio values are totaled and an amount for available equity is calculated. The next part is for income from jobs, rental properties, dividends from shares and other business and investment income. If the project involves holding a property for cash flow, then that cash flow will automatically be included in this section. The income is totaled and a formula is used to calculate how much of that income is available for servicing additional debt. The user's current repayments on existing debts needs to be specified in the last part of this section. Once all this information is compiled, the program will calculate the amount of funds that are available, either in cash or existing credit, additional borrowing capacity and funds from joint venture partners to determine if there is sufficient funds available for the project. The results can be seen on the project summary sheet and also on the what-if sheet. The program will indicate whether the funding shortfall is in either available cash or borrowing capacity, and it will also display the amount of the shortfall. The data entered in these sections has no bearing on the financial results of the project. The last tutorial in the series is to explain a number of special functions and facilities that exist in the program.